Global markets just witnessed their biggest meltdown since 2020. Over $2.5 trillion wiped out in a single day, with the Dow plunging 1,700 points and Nasdaq crashing nearly 6%. Tech giants collapse, recession fears are now rising fast, and Trump's aggressive tariffs have triggered full-blown panic across the board. But amidst all this chaos, how are the 5 key indices, the Dow Jones, the S&P 500 Index, the Nasdaq, STI, the Hang Seng Index, how are they really holding up? Are we on the edge of a deeper crash? Or could this sell-off be setting up the next big opportunity? Let's dive in. So let's go through some of the news, right? Dow Jones plunged 1,700 points, Nasdaq S&P 500 plummeted in the biggest rout since 2020. What has happened? Well, essentially, right, Donald Trump's surprisingly steep Liberation Day, you call it, right, tariff has sent shockwaves through the markets worldwide. Nasdaq sold off close to 6%, S&P 500 nearly 5%, Dow Jones tumbled 4%. The Dow's 1,700 point drop was the 5th worst in its history. Many of the mega cap tech stocks like Apple have sold off as well, 9%, amidst concern about disruption to its supply chain, which most of its materials coming from China. Nvidia and other chip stocks also tumbled thanks to similar concerns, right? With the AI chip leader sliding over 7%, right? And the so-called magnificent, the M7 stocks, right, that led the market rally over the past 2 years has shed over $900 billion in market cap. So why is this the case? Well, essentially, Donald Trump has imposed what we call a baseline tariff rate of 10% on all US trading partners, all right? All imports that are coming into the US. And Donald Trump has imposed reciprocal tariffs, even higher tariffs than the baseline, on some of his top trading partners like China, like European Union as well, all right? Even higher than the baseline like China. He slapped a 34% increase in tariff from the previous 20% plus 34%. It is a 54%, all right, tariff on China. Even Singapore, all right, got hit with a 10% tariff, the baseline. So there are now concerns about retaliatory actions that many of these countries can take, all right, and this will cause what we call a tit for tat escalation, right, and it could cause a global trade war. And that's why it triggered a lot of uncertainty in the markets. The indices all sold off heavily. When the Singapore market opened on Friday, while Asia's stocks extend global market rout on Trump tariff shock, recession fears, STI tumbles 2.9%. Quite a heavy sell down in the Singapore market that actually has been quite resilient over the past few weeks. Asia share markets have tanked on Friday, 4th of April, because of these tariffs that could potentially fan a trade war that many people fear will spark a recession or maybe even inflation coming back up. So STI has tumbled like 100 over points in a day, one of the highest over the past few months. After the stock market closed on 3rd April, Deputy Prime Minister Gan Kim Yong said that the sweeping tariffs will have a significant impact on Singapore's economy. So there we have it. That is pretty much the news on why we have sold off really heavily, all right, and there could potentially be even more weakness in the short term. So now let's dive into each of the key market indices, right? The Dow Jones, the S&P 500, Nasdaq, Singapore Straits Times Index, and even the Hang Seng Index. Very quickly, these 5 indices, what are we seeing for each of them? Could we be more selling? Could there be an opportunity that can come out soon? What are some of the key support levels whereby hopefully we may see some bargain hunting coming in? Let's dive into it. So this is the Dow Jones right over here, 40,545 points, right? Sold down by more than 1,700 points, all right? One of the largest drop in history. So you can see that I've turned on what we call my 1GT Pro indicator, whereby in a matter of seconds, we can have a bullish or bearish signals on any asset classes, even the markets, even the indices on any stocks as well. So let me just turn it on, and you can see right over here, well, over the past 1 month, we did have a bearish signal coming up. So the bullish signal somewhere in January went up, a bearish signal came in somewhere in February, even before this recent news, right? And it has sold off down, down, and down. So let's see where could the potential support level be. Well, I would say that you want to take note of these very key level, the 40,000 would be a very key psychological level for the Dow Jones. We have been holding above this level since August, right? Almost 6 or 7 months, all right? And I think that is very critical. If we can stay above that level, still okay. Hopefully some buying pressure comes back, rebound, test it a bit, and we may see a potential reversal from it. But are we exactly out of the woods? Can we see actually more selling? Well, you can see, right, this bearish signal, right, have came out. The green 20 days moving average line. So when we look at the short-term trend, we look at the green 20 days moving average line. You can see, right? It goes down, up, and down. You can see right now this green 20 days moving average line that indicates the short-term trend. Unfortunately, it is still pointing down. So we are not out of the woods, right? In fact, I've been talking about this over the past few months as well, all right, that we could see more weakness. So it's probably not the right time to buy right now. All right, you want to be a bit more patient. You want to wait for clearer signs of the market to stabilize, all right, to form a bit of a bottom, to maybe see some bullish reversal candles, to maybe see the short-term trend stop pointing down, to maybe even see a new bullish signal. So what do I mean by bullish signal? Well, something like over here, right? So you can see each time we have a bearish signal, like over here, that was in August 2023, we got a bearish signal. The green 20 days moving average line went down, down, down. Wait for it, and there we go. That was in November 2023, right? Before 2024 started, the bullish signal, the green 20 days moving average line started to point up, and off we went. All right, so the question is, has this actually happened yet, or is the bearish signal still playing out? Well, it seems like it has not happened yet. All right, we could still see a bit more selling. Hopefully we hold above 40,000. If that were not to hold, all right, if that were to break down, then unfortunately we can't even see more selling towards the next support that could be around the 38,000. So hopefully these are all key support levels. It doesn't mean that when you draw these support levels means you will just go there and rebound from it. No, right? But these are where we have been supported previously. That's where bargain hunting have happened previously. So if we were to hit there and we were to spot certain confirmations, like the short-term trend reversing or even the new bullish signals coming out, that could guide us to think about getting back in again, right? So this is Dow Jones, unfortunately, a bit weaker based on its sell down yesterday night. There could still be a bit more weakness in the short term, even though the longer term trend, right, still looks okay, right? So look at the red and the blue line. So this is the 100 days moving average, the red line, and the blue line would be the 200 days moving average. So right above the blue, both are still, kind of like pointing up a bit sideways a bit. So it's still okay, but unfortunately, the short term is still down for now. Let's move on to the S&P 500 index, the index that tracks the top 500 companies in the US, sold off by almost 5%. You can see right over here, 5,396. It just gapped down, and we are right over here. Quite a bearish candlestick bar over here yesterday. So let me get to draw this very key support level that we have officially broken below it, and that would be the 5,500. So 5,500 is a psychological level. We have been holding above it since like September, but you can see last night, it just broke through, went down, and if you look at it a little bit further, well, we actually had a couple of bearish signals coming out in February. That was even before the sell down last night. So February, about a month back, right? More than a month back. A bearish signal, two bearish signals, it starts coming down. The short-term trend is still pointing down. So unfortunately, there could still be a bit more selling. We're not out of the woods yet. You want to be a bit more patient if you're looking to buy the indices or some of the top blue chip stocks. Just be a bit more patient first, because as I mentioned, right, we could really see a bit more selling maybe next 1-2 weeks, maybe up to 3 weeks as well. It stabilizes, it forms a bottom, then you can think about getting in, right? So not yet. Let's see where we could potentially head to. Well, I would say the next support level after 5,500 would be around the 5,200 level. That was where we were in May, all right, last year, almost a year back. Same thing in August, we rebounded from here. So you can see for S&P 500, right, we had a couple of a bullish signal, right, since 2023, and off we go, right? Another one in May last year, off we go, right? So we had bearish signals previously as well in 2023. You can see down, down, down. So now, these two bearish signals is still playing out, like what has happened in 2023, right? We have not got any new reversal bullish signal coming out. So I think the market is still not out of the woods. We can still see a bit more selling. So just watch these support levels, right? Be patient, wait for an opportunity to get in, all right, as the market stabilizes, as we form a support base, as we see maybe even a new bullish signal coming out. So let's move on to the Nasdaq Composite Index next, right? The index that tracks the top technology companies in the US. So you can see right over here, quite a heavy sell down yesterday. We went below the 17,000 psychological support level. Very strong bullish signals coming out since last year. Look at this, right? Bullish signals, right? The tech stocks all rallied heavily from November all the way up 2023. Bullish signals went up. May last year went up. So a couple of bullish signals, very strong uptrend. One of the biggest rally we've seen over the past 1-2 years, right? But since like December, January, unfortunately, well, we had a bearish signal coming out for the entire Nasdaq Composite Index, right? The green 20 days moving average line that was going up started to flatten out, and you can see right now it has pointed down. It is still pointing down. So same thing, the short-term trend for the Nasdaq Composite Index that, you know, kind of like tracks the top technology companies, Nvidia, Apple, all right? It's still kind of like pointing down, so we could still see a bit more weakness. Let's see where could the next support level be. Well, I would say maybe just somewhere around that 16,000, or, you know, even give a bit more leeway, the 15,000, right? 15,000 could be even the next support level, right? So I think don't want to rush, right? Because, you know, that there are no clear signs of a reversal yet, all right? It still seems that the short-term trend is down, all right? The longer-term trend may be a bit of sideways. You can see the red is still above the blue. It's not really crossed down. So longer-term trend, it takes a while to be seen, all right? Maybe a few more months, if we were to break a few support levels, yes, we may turn into a long-term downtrend. But right now, longer-term still okay, still sideways, but short-term is down for now, right? So we don't want to think about buying right now. If you have some positions, it's good to maybe reduce some exposure, especially on those technology stocks as well, all right? Depending on if it's a trade or longer term positions. So yeah, we could see more selling, all right? It could be a really attractive opportunity as well, all right? If you know what stocks to actually get in as well, once the market stabilizes, once we see signs of a reversal coming back. So guys, if you want to find out a bit more on the entire 1GT Pro indicator based on my one good trend strategy, which, you know, we can turn it on any asset classes, even on the markets, right? Go ahead to click on the link below this video, register for a free webinar where I share with you guys a bit more on the entire strategy and how perhaps you could have an indicator like this to guide you not just about getting in, but also about getting out when the time comes, and maybe to get back in again when the time comes. All right, so find out a bit more, click on the link below the video, and I'll share with you guys a bit more on this strategy, and also, you know, how do we filter out the top 1% of stocks to know when to get in and out on them, right? So the market has been selling down, right? But to be honest, there are still strong stocks. There are still stocks which are indeed actually pushing higher as the market is selling down, right? So not everything is selling down, right? You just need to know what stocks to look at. So register for a free webinar, and that's where I'll share you guys how to filter out those top winning stocks even in current market conditions. So here's the STI, Singapore Straits Times Index, 3,834. So you look at the STI, right? Actually, we have been in a very strong uptrend since last year. Look at the red and the blue line, all right? Long-term uptrend intact. In the short term, we did have a couple of sell down in August last year. A bullish signals came out, went all the way up, and you can see a little bit of a pushing up, a bit of sideways as well. But over the past few days, well, we have a new bearish 1GT signal. So let me just draw this resistance level. I think that would be the key 4,000 level. I think that is pretty much the horizontal resistance for the entire STI for now. If we're still below it, we might still trade sideways. We might attempt to break it, maybe come back down. All right, but only if we break the 4,000, then we could see more upside. If not, it would just be a cap for now. So let's take a look at what could be a support for the entire Singapore's Straits Times Index. Well, I would say that support could be maybe around 3,800, right? 3,800, that is pretty much where, you know, we have been supported since February for about 2 months. You can see rebounded, even somewhere in March, rebounded. Now we are making our way back down again, all right? So just take note, right? We have a bearish signal. The green 20 days moving average line was up. It started to flatten out, maybe even pointing down just a little bit. So just be a bit careful. I think if, you know, we were to break the 3,800, well, then even the next support level could be where we might head to, and that would be around the 3,700. Look at this, right? That was where we were in November, December last year, rebounded. So 3,007 to 3,008, you know, pretty much where the longer term moving average line is. Well, the 200 days moving average is right over here. So that could be where, you know, some bargain hunting could come back again. So yeah, still a bit of weakness in the short term. A bearish signal have came out. We want to wait to see some stability. We want to wait for at least a new bullish 1GT signal to come out before maybe thinking about getting back in to ride any upside. Let's move on to the final indices, the Hang Seng Index that got hit as well over the past few days due to the US market heavily selling down. So very quickly, you can see for the Hang Seng Index, right, we have turned from like a downtrend in the longer term since 2023. Look at this red and blue, just going down, down, down. But somewhere around last year, June to July, right, the 100 days moving average, the red line is crossed above the blue line, and both of them are actually pointing up. So the longer term trend has turned up. all right, for the Hang Seng Index. Very strong move. Many of the Hang Seng or the Chinese tech stock have pushed up Alibaba, Tencent, all right, and that has pushed the Hang Seng Index up as well, right? Since in January, we had the launch of DeepSeek AI startup, all right, at a fraction of the cost. So that really sparked off a whole new wave, bullish sentiment, right, in the Chinese tech sector, in the Hang Seng Index. But let's take a look at what has happened. So a bullish signal have came out in January. You can see right over here, in fact, right over here on the 21st of January. Let me just go back to the past a bit, right? So you can see somewhere in January 2024, a bullish signal. There we go. When you get a bearish signal, not good, as I said. So for the rest of the markets, right, the Dow Jones, the S&P, the Nasdaq, even the STI, right, we have seen a bearish signal. And look at this, right? Each time we have a bearish signal, it just means that it is a bit weaker. We have broken maybe a trailing support level, all right? And if the short-term trend turns down, we could see selling. Look at it, selling down. Another bearish signal here, it sells down, all right? A bullish signal goes back up. And Hang Seng Index, January, we got a bullish signal. So is there any bearish signal coming out yet? Well, thankfully, still not yet. So let me go ahead to maybe just turn on what we call the trailing support level, right? One of the features of the One Good Trend Pro indicator. Let me just turn it on. You can see right over here, right? So each time you can see, why do we have a bearish signal? Look at this, right? We got a bearish signal coming out. Why? Because each time there's a bullish signal, we have a trailing support that follows the market as it moves higher, right? But when we break below the trailing support, this trailing support actually gives the stock or gives the market space to breathe, to hopefully move higher. So if you're staying above it, it's good, right? The uptrend could still be intact. But one fine day, if they go below it, there we go, pump, a bearish signal, a trailing resistance pops up, and now you can see it is following it as it goes lower and lower. So that is not good, right? Look at this. So a bearish signal, it starts going down. All right, same thing here. A bearish signal, it starts going down. So now let's take a look at this trailing support. In January, we got a bullish signal and a trailing support pops up. Look at this, right? A support that follows Hang Seng Index, all right, as it moves up. Look at this, up, flat, follow, up, all right? And now it has started to flatten out. So look at this right over here. I think you want to be a bit more careful, because even though there's no bearish signal. So today, Hang Seng Index, you can see we have sold off, but there's some bargain hunting coming back. We are just trying, all right, to stay above this trailing support level. So I'm not too sure exactly when you're watching this video, but if we were to go below like the 22,800 or 22,700 for the Hang Seng Index, well, not so good. It means that this trailing support would be broken. Now we're just above it, right? I don't know, right? We're just above it. Not too sure at the end of the day, but if we to go below 22,800 or maybe 22,700, I think we could see a bearish signal. The green 20 days moving average line that was pointing up, flattening out right now. It may even point down. So you just want to be a bit more careful. All right, we need to monitor over the next few days. There could be even a new bearish signal coming out for Hang Seng Index. It's not shown yet, but I think we have to watch the support level very closely. If that breaks, unfortunately, we could see a bearish signal like this. All right, another one like this that could lead the sell down, all right, in the short term, even though the longer term trend is still up. So look at this, right? All this while when we sold off, well, the longer term trend was still up. Look at this, red and blue was still up. We sold off. So same thing, right? Longer term trend up, but doesn't mean we cannot sell down in the short term. We can still sell down in the short term, maybe to 20,000, maybe to 20,500, maybe to 21,000. But that is where we want to look out for as well, to see if there are any signs of stability coming back, or maybe even the bullish signals to ride it all the way back up. All right, so this is it, guys. Right, we have covered the Dow Jones, the S&P 500, Nasdaq, STI, and also Hang Seng Index. So I hope you now know why are we seeing some heavy selling, or not heavy, but massive selling over the past few days. What could be the potential support level be for each of the markets, whereby hopefully we see some stability, we find a bit of a bottom, and that could be any signs of reversal as well that we want to watch out for near this support level. So not out of the woods, all right? Some selling in the short term can still happen. Be patient. All right, let's see how it plays out in the next few weeks, or maybe up to next month. We'll do another video to cover the markets again. So if you found some value in this video, guys, go ahead to hit the subscribe button, hit the follow button, so that you will not miss out on any videos like this. And as I mentioned, right, if you want to find out a little bit more on the entire One Good Trend strategy, or perhaps how you can have an indicator like this, right, the 1GT Pro indicator, to guide you on when to get in, when to get out if you see like a bearish signal, right? Attend one of those free webinars. The link's right below the video. Click on it, register for it, and I can't wait to share with you guys more. Joey here. Thank you so much for watching. I'll see you in the next video. Take care.